is the way the global market has traded yesterday. But let's get a better sense on comments from Trump and the kind of trade action that we've seen on Wall Street yesterday. To understand all that and more, we have Mr. Santosh Rao, the head of research and partner at Manhattan Venture Partners, joining us. Santosh, hi, morning, and thanks for your time. First up, we've just heard words coming in from Donald Trump about his contribution to inflation, reverse migration, the warrior dividend, and pharma prices going ahead. What is your first takeaway from everything that Trump has said, if you've tracked that speech this morning?
Yeah, good morning. There is a slight disconnect of what he said and what's going on. The big word right now, big operative word right now in the US is affordability, and the prices have gone up. So he's saying that they're coming down. So it's debatable. Some prices are, some not. But generally, let's see. We're going to get CPI data tomorrow, and let's see where that trend is. And that is a big problem. We didn't have data, so we were running blind so far. So I think at this point, CPI, if it is reasonable, 3 or less than 3, then it's fine. Then he's able to control the prices, stop it from going up too much. That you can say that it hasn't come down appreciably. That I can say because I live here and I pay for it. So yeah, so little disconnect. Yeah, and he's talked about the dividend checks and all that, and that's also factored in. So let's wait and see. He's always optimistic. He likes to get ahead of the game and speaks a little ahead of the time. So let's see. Hopefully, it'll get there. But at this point, affordability is a big factor. Prices are still high, but next year is well good, and you're seeing that in the stock market. Stock market, what you're essentially seeing is a rotation, money coming, people taking profits out of the winners and putting it in financials and healthcare and other areas, and you're going to see a lot more. And as we get into next year, that's a whole different game. There are a lot of incentives, pro-growth policies coming in. So next year is shaping up to be good, but this year end, just ahead, we're not getting that Santa Claus rally that we are expecting, but we'll get there at some point. But next year, I think we'll definitely see much better activity in terms of the financial markets.
Very interesting. Santosh, very good evening from where you are at least. Give us a sense of what lies in store for equity markets. I know you've given us a hint that no real Santa Claus rally expected, but we're now at all-time highs. Inflation is obviously something that the Fed will closely monitor. But despite that, the Fed is willing to bend. They're willing to cut rates despite inflation being above their tolerance band and well above their tolerance band. For how long can they afford that? That's point number one. And if they can't, what happens to markets?
Yeah. So at this point, I think the market is factoring one cut, which just happened, and then probably in the first quarter or the first half, you'll get another cut. So I'm in the camp of right now looking from today's vantage point, one to no cut next year. If he reduces rates, if he cuts rates, if inflation spikes up rather, and the labor market stays low, weak, and really in bad shape, or kind of softening further, I think that's a big problem. Less demand, and it's really you're caught in a bind. I mean, the Fed, your inflation going up and labor market slowing down, you're pretty much in a stagflation kind of scenario. So you don't want to get there. So they're going to really watch the market. Let's hopefully inflation doesn't spike up. They said they're watching it carefully, and the Fed chair has said don't expect automatic cuts in the future. So they're going to watch the market. So I'm in the camp of one cut next year, and if anything other than that, I think the market will not like it. That's what's being factored into the numbers right now. Let's wait and see. He has a lot of good policies coming in next year. There's a lot of liquidity flush events. We're going to get all this tax filing, tax refunds, and then he's going to reduce some taxes here and there. He has incentives for housing. He has incentives for other areas as well. And the oil prices are coming down, which is a big incentive. So a lot of things coming together rather for 2026. So I think there should be good tailwind coming into 2026 and lead up all the way.
Santosh, good morning. Do you see 2026 to have any brush of the tariff wars which are continuing in 2025? Of course, from a macro point of view, you have a labor sector which is weak, inflation which is rising, and possibly a one rate cut in 2026, as you said. But uh, is tariff going to be a narrative for 2026, or at least for the first half of 2026?
No, I think that's one thing that will work in favor of the market because we know where the tariffs are. I think it's settled now. We have some visibility. We have some line of sight as to where the tariffs are. I think he's not going to go any unless does some punishing tariffs here and there. But at this point, I think it's pretty much settled wherever. I think there's some cases where India maybe he'll bring that down, which will be beneficial, of course, to India and some of the retail markets here as well. They're complaining that prices are going up here, but that'll help them lower the costs here. But in general, I think the one-time price adjustments that tariffs do has already happened. So it's factored into the market right now. So I don't expect tariff to be a big hindrance next year. Uh, if he can cut it down, he's selectively bringing down some tariffs, which is even better. That should help the affordability issue that is really haunting him. But the biggest thing that I wanted to highlight is this year, 2026 is going to be an election year. He needs to keep the House. If not, he cannot pass anything. Senate is going to keep not that many people up for re-election, but House, he's historically, president loses the House after 2 years. So if he loses that, he won't be able to pass any of his big plans. So I think he needs to win. So he's going to be very pro-growth, just kind of very friendly policies that will keep him popular with the popular. So very populist measures will come into 2026, and that should also help the market. So net, we are expecting a good 2026.
Okay, so sounding optimistic over there. But Santosh, with that, we'll let you go. Thank you so much for your time and a very good evening once again.
Thank you.